Somewhere in America tonight, a widow is sitting at her kitchen table, going through a shoebox of her husband's papers. Old tax returns, a folded marriage certificate, warranty cards for appliances that broke 20 years ago. And near the bottom, she finds an envelope with a company name on it she doesn't recognize. No return address she remembers. Just a name, a policy number, and a date from 1983. She almost throws it away. That envelope, it turns out, is worth just under $9,000. It's a small life insurance policy her husband took out through a job he left in the late 70s, one he never mentioned, probably because he forgot he had it. The company was bought again, then merged into something else. The premiums were paid up. The policy stayed active. And when he passed, nobody called. Nobody wrote. Nobody knocked on her door to say, "Ma'am, there's money here with your husband's name on it." That's not a rare story. That's the American default. Right now, U.S. state treasuries alone are holding somewhere north of $70 billion in what's called unclaimed property. Old bank accounts, uncashed checks, forgotten stocks, insurance payouts nobody ever collected, safe deposit box contents that got seized after the owner stopped answering letters. And a large share of that money belongs to people who are already gone. People whose spouses, sons, and daughters have no idea it's sitting there. Here's the part that stings. Almost nobody is looking, because almost nobody knows to look. If you've lost a parent or a spouse or a brother or sister in the last 5, 10, even 20 years, there is a real chance, not a small chance, that money exists somewhere with their name on it. And if you don't go looking for it, no one will hand it to you. The system is not built to find you. It's built to hold that money quietly, sometimes for decades, and wait for someone to walk in and ask the right question in the right place. That's what this video is about. Not vague promises, not internet rumors, a step-by-step map of exactly where this money hides, who's holding it, how to prove you're entitled to it, and the traps that stop most families from ever collecting. Because here's the uncomfortable truth. Banks are not going to hunt you down. Insurance companies are not going to knock on your door. Former employers are not going to dig through decades of payroll records to figure out where your father's last check went. The IRS is not going to call you about a refund your mother never cashed. None of them will. The people who eventually get this money are almost never the ones who were owed it first. They're the ones who knew where to look. And the difference between the family that walks away with nothing and the family that walks away with thousands, sometimes tens of thousands, is not luck. It's not lawyers. It's not connections. It's knowing that 7 specific places exist and checking every single one of them in the right order. Most families check 0, a few check 1, almost nobody checks all 7. So before we go one step further, understand this. If your parent or spouse has passed, there is homework waiting for you. Nobody assigned it, nobody warned you, and nobody is going to remind you. But if this much money exists, and it clearly does, the next question is the one that matters most. Where, exactly, is it hiding? And why did nobody tell you? Here's something most Americans have never had explained to them. When someone dies with money sitting in a bank account, a pension, an old brokerage, or an insurance policy, there is no central system in this country that automatically finds their family and hands it over. None. That system does not exist. What exists instead is a quiet legal process called escheatment, and it's the reason billions of dollars slip out of private hands and into state custody every year, often without a single family member ever knowing. Here's how it actually works. A bank has an account. The account holder passes away. The family, understandably, doesn't know about that specific account. Maybe it was an old savings account from the 70s. Maybe a certificate of deposit from a bank that got bought out 3 times. Statements stop getting opened. Nobody calls the bank. Nobody logs in. After a period of inactivity, usually 3 to 5 years depending on the state, the account is legally declared dormant. Once it's dormant, the bank is required by state law to turn that money over to the state treasurer's unclaimed property division. That's escheatment. The bank is off the hook. The money is now the state's problem. And the state's job is not to find you. The state's job is to hold it until you find them. Read that again. The state's job is to hold it until you find them. Now, technically, most institutions are required to send a notice before they hand the money over, a letter to the last known address. But think about what that means in real life. Your father moved in 1994. He passed in 2011. The bank sends a dormancy notice in 2015 to an address he hasn't lived at in 30 years. Somebody else's mail. Somebody else's trash can. Gone. The same story plays out with life insurance, with old employer pensions, with brokerage accounts from a stockbroker who retired in 1998, with final paychecks from a job somebody left 40 years ago. The institution followed the rules. They sent a notice. Nobody answered, and the money quietly changed hands. Here's where it gets worse. Because there is no single national database that links a person's social security number to every account, policy, and benefit in their name, families are essentially blind. When someone dies, you can go through their filing cabinet, their email, their tax returns, and still miss half of what's out there, because half of it they forgot about themselves. Think about it. How many of us can list every account, every old 401k, every insurance policy, every utility deposit, every stock certificate we've ever had? Almost nobody. And whatever we can't remember, our children definitely can't. So the money sits, and it sits. And in many states, it can sit forever. Some states will hold unclaimed property indefinitely. Others eventually roll it into the general fund, meaning after enough years, the state simply keeps it. That's the machine you're up against. Not evil, not a scam, just a slow, quiet, bureaucratic system that was never designed to find grieving families. It was designed to protect institutions from having to keep dormant money on their books. And once you understand that, the strategy becomes obvious. If nobody is going to come find you, you have to go find them. You have to go to the places this money hides and pull it out yourself. So let's start with the first place, the one that pays off the fastest, costs nothing, and takes about 10 minutes. If you only take one action from this entire video, make it this one. Because this is the search that most often lights up first, and it's free. Every single U.S. state runs an unclaimed property division. It's usually housed under the state treasurer's office or the state comptroller, and every one of them maintains a public, searchable database of names and dollar amounts sitting in their vault waiting to be claimed. You don't need a lawyer, you don't need a login, you don't need to prove anything up front. You just need a name. There are two ways to search, and you should use both. The first is a website called missingmoney.com. It's not a scam site. It's the official multi-state search tool endorsed by the National Association of State Treasurers. You type in your loved one's first and last name, pick a state, and it searches records across most of the country in one shot. If your father lived in Ohio, worked in Michigan in the 60s, and retired in Florida, Missing Money gives you a way to check all three at once. The second is the individual state site. Because not every state participates fully in Missing Money, and some states hold records, the multi-state search will miss. So if your loved one lived in California, you also go directly to the California State Controller's Unclaimed Property page. If they lived in Texas, claimittexas.gov. New York, New York State Comptroller. Every state has one. Just search Unclaimed Property plus the state name, and make sure the website ends in .gov, not .com, not .org, .gov. That's how you know you're on the real one. Now here's the part most people get wrong. They search their loved one's name once, see nothing, and move on. That is a mistake. Here's how to do it correctly. Search every version of the name. If your father was Robert James Miller, search Robert Miller, Bob Miller, R.J. Miller, R. Miller, Robert J. Miller, and James Miller. Old records were entered by human beings decades ago on typewriters and early computers. Middle initials get dropped. Nicknames get used. Spelling gets butchered. I've seen families miss six-figure claims because they only searched one version of a name. Search every state the person ever lived in, not just where they died, where they worked, where they had a summer home, where they went to college, where they had a brief job in their 20s. Unclaimed property stays in the state where the account was held, not the state where the person lived when they passed. Search maiden names. Widows and daughters miss enormous amounts of money because they only search the married name. Old bank accounts, old stock, old bonds, they may still be filed under the name a woman used when she was 22. And here's the sharpest tip. Search deceased relatives further back than you think you need to. Your grandmother, your uncle, your father's first wife. Because if a claim was owed to someone who died before ever collecting it, that money can still be legally claimed by their heirs, which may include you. If you find a hit, do not panic and click frantically. Write down the reference number. The The state will give you clear instructions on how to file. You'll typically need a death certificate, proof of your relationship, and sometimes probate paperwork. We'll get to exactly how to handle that in a few minutes. But right now, understand this. State databases are the surface layer. They're the easiest win. And for many families, they'll be the first real dollars back. The bigger money, though, is often held one level up. Not by the states, by the federal government itself. State databases are the first stop. But if you stop there, you are almost certainly leaving money behind. Because there is a whole second layer of unclaimed funds that never makes it to any state at all. It sits with the federal government. And the federal government has no single phone number, no single website, and no single office that hands it back to grieving families in one place. You have to go get it, piece by piece. Let me walk you through the four biggest pieces. The first is unclaimed IRS tax refunds. Every year, the IRS ends up sitting on tax refunds that were owed to people who passed away before cashing the check, or refunds that got returned because the address was outdated. If your parent or spouse died, and there was a final year tax return still owed to them, or a refund from a prior year they never received, that money exists. To claim it, the estate or the surviving spouse generally needs to file IRS Form 1310, which is the form for claiming a refund on behalf of a deceased taxpayer. Most families have never heard of Form 1310. That is exactly why the money sits. The second is U.S. savings bonds. This one is enormous, and it's the category most seniors' children have no idea about. Millions of Americans in the 50s, 60s, and 70s bought paper savings bonds as gifts, as retirement savings, as slow, long-term investments. Many of those bonds matured decades ago and stopped earning interest. They're still redeemable. But if the original owner passed away and the paper bond is lost, in a filing cabinet, in a safe deposit box, in a shoebox in the attic, that money is just sitting. The U.S. Treasury runs a free tool called Treasury Hunt at treasuryhunt.gov. You can search by Social Security number for matured bonds and undelivered interest payments. If your father was the type who bought savings bonds and you don't know where they all went, this search alone can uncover thousands of dollars. The third is unclaimed pensions. This one breaks families' hearts when they realize what they missed. If your parent or spouse worked for a private company that offered a traditional pension and that company went bankrupt or terminated the plan, the Pension Benefit Guaranty Corporation, the PBGC, often took over the payments. The PBGC maintains a searchable database of unclaimed pensions at pbgc.gov. People who worked for airlines, steel mills, auto parts makers, department stores, textile plants, so many industries that no longer exist. They left behind pension money that the PBGC is holding right now, waiting for someone to file. The average unclaimed pension is not small. It can be tens of thousands of dollars in vested benefits. The fourth is FDIC funds from failed banks. When a bank collapses, the FDIC steps in to make depositors whole. But sometimes the depositor has moved or passed away and the money never gets delivered. The FDIC maintains an unclaimed funds search on its website. It's a smaller category than the others, but if your loved one banked with an institution that failed in the 80s, 90s, or 2008 crisis, it's worth 30 seconds of your time. And there are smaller federal pockets too. Unclaimed veterans benefits through the VA, old federal employee benefits, foreign bank account claims through the U.S. Treasury. Each one, on its own, might be modest. Together, they can add up to real money. Here's the pattern to see clearly. The federal government does not consolidate. Each agency runs its own little island of unclaimed money, and unless you walk into each island by name, none of them will find you. Now, all of these categories combined are significant, but there is one single type of asset that outranks all of them for how often it goes unclaimed and how much it pays out when it does. And it's the one most families never even think to check. Of every category we've covered so far, this one is the heavyweight. Unclaimed life insurance is quietly one of the largest pools of missing money in the United States. Industry estimates have pointed to somewhere around $1 billion in unclaimed life insurance benefits sitting with insurance companies at any given time. And that figure has held roughly steady for years because new policies keep going unclaimed just as fast as old ones get paid out. Let me explain why this happens, because once you see the pattern, you'll understand why almost every American family loses at least a little money here, and some families lose a lot. A person buys a life insurance policy when they're 40, maybe through their employer, maybe from an agent who came to their kitchen table one evening in 1978. They pay the premiums for years, sometimes decades. Then life happens. They change jobs, they move, they lose the paperwork. They forget the name of the company because the company got bought, then bought again, then renamed. And they never quite get around to telling their spouse or their kids the details. Then they pass. And here's the trap. Life insurance companies are not automatically notified when a policyholder dies. There's no direct wire from the Social Security Administration to every insurance company in America saying this person is deceased, please pay their beneficiaries. That system does not exist. What exists instead is this. The insurance company keeps quietly collecting premiums if the policy is paid up through a cash value structure, or they simply mark the policy as lapsed if payments stop. In either case, they wait for the family to file a claim. If nobody files, nobody pays. And the family often doesn't file because the family doesn't know the policy exists. I have talked to widows in their 80s who found out, 10 years after their husband's death, that he had a small whole life policy from his very first job in 1962. $60,000, sitting there. Their husband never mentioned it because he genuinely forgot he still had it. Here is what you do about this. There is a free tool called the NAIC Life Insurance Policy Locator. NAIC stands for the National Association of Insurance Commissioners. You can find it at naic.org. You submit a request with your deceased loved one's name, social security number, date of birth, and date of death. That request goes out to participating life insurance companies across the country, and any company that finds a policy in that person's name is required to contact you directly if you're the beneficiary or the executor of the estate. It's free, it's official, and most Americans have never heard of it. But do not stop there. Also do this. Go through every piece of paper your loved one saved, every filing cabinet, every drawer, every safe deposit box, every email folder if they had one. You are looking for policy numbers, premium notices, annual statements, and letters from insurance companies. Even one old letter with a policy number on it is enough to start a claim. Check every employer they ever worked for. Group life insurance policies through employers are one of the most commonly forgotten benefits in America. Many workers had $1 of coverage for every dollar of annual salary, sometimes more. A parent who worked for a company for 25 years may have had a group life policy worth 6 figures, and if they retired before it converted or lapsed, the family may still have a claim. Check with the state unclaimed property office too, because when an insurance company knows a policyholder has died but cannot locate the beneficiary, they eventually escheat the money to the state. So the same missing money search you did earlier may pull up life insurance proceeds you didn't know existed. One policy, one search, one form. That's the difference between walking away with a thank you card from the funeral home and walking away with the financial cushion your loved one always intended for you to have. Now, life insurance is the giant envelope, but the smaller envelopes, the ones almost nobody thinks about, add up faster than most families realize, and they're worth the next 5 minutes of your attention. The big categories, life insurance, pensions, bank accounts, get most of the attention, but there is a whole layer of smaller amounts that families almost never think to chase. Individually, they might be $200, $400, $800. Together, for many families, they add up to a few thousand more that would otherwise vanish. Start with utility deposits. When your parent or spouse first opened service with the electric company, the gas company, the water company, or the phone company decades ago, they often had to put down a deposit, sometimes $100, sometimes several hundred. Those deposits were supposed to be returned when service was closed out. But if the account got closed after death and nobody forwarded the mail, that refund check either bounced back or was never issued at all. Call every utility your loved one ever had service with. Ask specifically about a deposit refund on the closed account. Same with landlord security deposits. If your parent was renting when they passed, or had rented anywhere in the last few years of their life, there may be a security deposit that was never returned to the estate. Landlords are legally required to return deposits, But if there's no forwarding address and no one following up, that money often just stays in the landlord's account. Then there are medical refunds. This one surprises people. When someone is seriously ill in their final year, families often pay medical bills twice, once out of pocket, and then insurance or Medicare comes in later and reprocesses the claim. That creates a credit balance on the provider's books. Hospitals, doctors' offices, physical therapy clinics, and pharmacies sometimes owe families hundreds or even thousands of dollars in overpayments. They rarely call to tell you. You have to call them. Ask every medical provider your loved one used in the final year of life whether there is a credit balance on the account. Final paychecks and unused vacation pay. If your parent or spouse was still working when they passed or had recently left a job, there may be a final paycheck, accrued vacation, or unused sick time that was never paid out to the estate. Contact the last employer's HR or payroll department directly. Some employers, especially small ones, quietly write off amounts owed to deceased employees if nobody asks. HSA and FSA balances. Health savings accounts and flexible spending accounts often contain leftover funds. An HSA balance passes to a beneficiary or the estate. Contact the plan administrator. Credit union member shares. Every credit union account has a small share deposit that makes the person a member. If your loved one was in a credit union, that share is still theirs. Small amount, but real. And finally, brokerage accounts, dividend checks, and old stock certificates. If your loved one ever owned even a few shares of stock, especially before electronic record keeping became standard, there may be uncashed dividend checks or certificates worth searching for. The transfer agent for the stock, or the state unclaimed property office, is where these usually surface. Individually, these are small doors, but when you open all of them, the total can rival some of the bigger categories. And now that you know where every door is, there's just one thing standing between you and the money. And it's the reason most families quit. Here's the part nobody warns you about. Finding the money is not the hard part. Proving you're allowed to collect it is. And this is exactly where most families quit. It usually plays out the same way. A daughter finds her mother's name on a state unclaimed property database. $1,200. She's excited. She clicks File a Claim, and then the form loads, and her stomach drops. The state wants a certified copy of the death certificate, proof of her relationship to her mother, a copy of her own government-issued ID. If the amount is over a certain threshold, often $5,000, they want letters testamentary or letters of administration from probate court. If there's no will and no probate, they want a small estate affidavit signed and notarized. If there are other heirs, they want signed releases from every one of them. Every document has to be certified. Every signature has to be notarized. Every copy has to be original. And the daughter thinks, $1,200 is not worth this headache. She closes the tab. The money goes back into the vault. That's the trap. Let me explain how to get past it, because the paperwork wall looks bigger than it actually is once you understand the pieces. The single most important document you need for almost every claim is a certified death certificate, not a photocopy, not a scan, a certified copy issued by the county or state vital records office with the raised seal. If you're helping settle an estate, order at least 10 of them right at the start. They cost about $15 to $25 each depending on the state. You will use them constantly, for banks, for insurance companies, for Social Security, for every unclaimed property claim. Families who ordered 2 run out and have to keep reordering. Order 10. The second document is proof of your relationship to the deceased. That's typically a birth certificate showing you as their child, or a marriage certificate showing you as their spouse. Also certified copies. The third is proof of your legal authority to collect on behalf of the estate. This depends on the size of the claim and the state. For small amounts, often under a threshold like $5,000 or $10,000 per state, you can usually use a small estate affidavit. It's a simple sworn document that says, I am the rightful heir, no probate is required, the estate is small, and I'm entitled to receive this property. Most states have a standard form available for free on the county probate court's website. For larger amounts, you generally need letters testamentary if there was a will and probate, or letters of administration if there was no will. Both come from probate court. If probate was never opened and there are significant unclaimed assets, it may be worth opening a limited probate just to collect them. If you're the surviving spouse, many states have simplified procedures that let you claim jointly held or spousal property with minimal paperwork. Ask the Unclaimed Property Office specifically about spouse claim procedures. One more thing. Never pay a company that contacts you offering to recover your unclaimed money for a percentage. These are called finder or air tracing companies. Some are legitimate, but most states cap what they can charge, and every dollar of unclaimed money can be claimed by you directly, for free. Do it yourself. The paperwork wall is real, but it's not tall. It just looks tall until you break it into steps. And that's exactly what we're going to do next. All right, let's put everything we've covered into a clear order you can actually follow. Grab a pen or come back to this section later because this is the map. Step 1. Order at least 10 certified copies of the death certificate from the county or state vital records office. Do this before anything else. Every claim you file will require one. Step 2. Gather the deceased's core information in one folder: full legal name, any nicknames or maiden names, date of birth, date of death, social security number, last known addresses going back as far as you can find, every state they lived in, every employer you know of. This is your search kit. Step 3. Go to missingmoney.com and search every version of the name across every state they ever lived or worked in. Then go directly to each individual state treasurer's unclaimed property website and repeat the search. Write down every hit. Step 4. Go to treasuryhunt.gov and search for matured U.S. savings bonds and undelivered interest. Step 5. Go to pbgc.gov and search the Unclaimed Pensions database. Step 6. Check the FDIC Unclaimed Funds search if the person banked with an institution that failed. Step 7. Submit a request through the NAIC Life Insurance Policy Locator at naic.org. This one takes a little time to process, so start it early. Step 8. Call every former employer you can identify. Ask specifically about group life insurance, pension benefits, final paychecks, and unused vacation payouts. Step 9. Call every utility, landlord, and medical provider from the final year of life. Ask about deposit refunds and credit balances. Step 10. If your loved one filed taxes and may have been owed a refund, prepare IRS Form 1310 for the estate or surviving spouse. Step 11. For each claim you file, determine whether you need a small estate affidavit or full probate letters, based on the amount and the state. Step 12. File every claim. Keep copies of everything. Follow up in writing every 30 days if you don't hear back. That's the map. Not complicated, just methodical. And it's the exact process that separates the families who collect from the families who don't. But before you close this video, there's one last thing worth saying. Here's the thing to remember when the paperwork feels heavy and the phone calls feel endless. This money is not a windfall. It's not luck. It's not something you're taking from anyone. It's the last quiet gift your loved one didn't know they were leaving behind. A policy they bought when they were young and hopeful. A pension from a job they worked hard at. A deposit they put down decades ago and simply forgot. Every dollar you recover was already yours. It was just waiting for someone in the family to care enough to look. And that's the part that matters. Nobody else is going to do this. Not the bank, not the state, not the insurance company, not the government. If you don't go looking, this money quietly stays where it is, and eventually, in many cases, it stops being yours at all. So take one afternoon, just one. Sit down at the kitchen table with the folder, the death certificate, and a cup of coffee. Start with missingmoney.com. Work through the list. Most families who do this find something. Some find a little. Some find more than they ever imagined. If this helped you, share it with a brother, a sister, a friend who's lost a parent or a spouse. Because there's a good chance they have money sitting somewhere too, and no one has told them either. This video is for general educational purposes and is not legal, tax, or financial advice. Rules and thresholds vary by state, by year, and by individual situation. For your specific case, consult a qualified attorney or a state professional. Take care of yourself and go find what's yours.